The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 29th of January. I can't believe January's almost gone. January 2019. Dow's up 76 at 24,605. It was up even more. It was up at the 25,674 level earlier this morning. Then there was a sudden pullback actually led by the NASDAQ. I'm not sure why, but it suddenly market pulled back. That meant that the long that we've been buying the long side of the Dow for a while here. A Tuesday, a week ago, we did go short just for a day, and was maybe 2 days, I can't remember. And that was a really spectacular turnaround. But all of a sudden, we're looking at a choppy sideways move. Now, in terms of the Chapman wave notations, this is what I'm going to do. I didn't do it before, but I'm going to do it now. I'm going to draw in an oval pattern. This oval pattern, you remember this one on the right here? That became an inverted Chapman wave stalk leg formation, but then it became a Chapman wave propeller shaft. I'm watching this really closely. I think almost all the work has been done to the upside at this particular point in the Dow. I'll show you each one as we go along in turn. But this oval pattern going sideways for a period of time, not a rectangle, it has to be an oval, has the potential to make this a long leg that goes, doesn't matter how many peaks, a long leg to the upside. Then you want some time taken on the right where you make this oval pattern, and then there's a break to the upside. So this is the leg, the body, the neck for the stalk leg formation, and then the beak comes back down into the body. Now that neck can be very extended. It can be quite short. The whole thing about it is that you are trying to identify what is an oval pattern that is a very positive bias, because there still has to be a breakout, in this case, above 24,860 in the Dow. And what is the arch formation rollover when you've already had so much time taken on the right in a V-shaped formation? Now we've used up too much time. Now the plethora, let me show you this right here. This is a Chapman wave automated projections of resistance. Look, 24,576, 24,807, 24,858, 25,231. And that's just saying that you can see that what it does is it stalls the market. Very often it is a turnaround point, but at worst, it's just a stalling formation for a few bars or days in this case before breaking to the upside. Well, you saw what happened right there, the 26,460 level. Market spiked, the Dow spiked to 27,055 and then pulled back rather sharply from the high that was made at 26,951 down to the low that was made at 21,712. So, all right, let's watch this closely, because at this point, that 200 period exponential moving average is really like a magnet. It's allowing the market to pull back and keep coming back to retest this orange line. Okay, let's get back to the different indices. S&P right now is down now it's down 4.41 at 2639. This is made in Chapman wave parlance. This is a potential peak C1, C2 double top. I'm looking at this and I'm thinking that we are very extended, that there are enough resistance points that we've been long all the time, except for last Tuesday. For a couple of days we were short. I think we're now going to start looking at the short side. I think the upside is starting to become limited. So the S&P at 2639 is looking like if it should hold 2627, maybe 2621. And if it takes that out, that's serious. But I think we can chop around sideways, taking a bit of a breather until it can build enough momentum to try to break the upside. We'll see what happens there. The QQQ, that's what I said, was leading the market down. Earlier on, it's down $1.50 at 160.161. This is the QQQ Trust Series, and we're looking at it sitting right on the 14-period exponential moving average, a close under 159.60. in the next 2-3 days would say, uh-oh, we've made some kind of a top in the Qs that has to be taken seriously. Let's look at the IWM for now. IWM at this particular, I should have done the other at the same time. IWM is actually holding well. It is at 146.52. Let me show you the daily with the projections all the way up to 149.64 and 150.19. So the IWM could go a little higher. Let me do the same thing for the Qs. The Qs right now, waiting for data, calculating data, boom. So the Qs 163.52, 167.82, and 168.75, and you've got 167.48-ish is the 200 period exponential moving average, and we haven't touched it yet. So until we touch it, this is a bit of a barrier. So I'm looking at this and I'm saying, okay, let's see how the market plays out. Let me just go back to the IWM to say that the IWM has 145.40 to 144.30 as key support levels if there's a sudden turn down intraday or by tomorrow. In the meantime, back at the ranch, gold has had a fabulous 4 days actually. It made an established low at 1280-ish level, 1282 was it, 1281.50 on the 24th of January. Spectacular run, breaks out above the 1300.40 high of the 4th of January. There's a continuous contract. Let me see if that's changed at all. Yeah, now the high is 1306.60. Oh man, 1306.60. Let me just put that in. 1306.61. I think it was 14. Right. Okay. And now what we've got couldn't have been the 4th. That's what it was. That could be 14. It was the 4th. And now what we're looking at is there's a price point of support in the 1306 level that in fact goes all the way to 1300, and that should be very good support. I think it's a little overbought right now on a single leg basis. I am calling it D, could actually be a brand new A, but I'm calling it D for now. D in the weekly and a new B in the weekly chart based on the Chapman methodology. What's really important here is, oh man, let me just look at the E-minis. Oh, look at that beautiful leg D in the 2-minute chart. All right, back to our story. So in terms of the bias right now, gold is being favored. I don't know what the reason is. There must be some economic reason. Silver is up as well. So gold is up 4.9. Silver is up 0.08 at 1584. Also a very nice move from the 1520 level to today's high of 1592. I'd say that's pretty darn good. I'm calling this, just for now that it's broken to a higher high, I'm calling it F/B. A couple of reasons why, because it has this double top look to it, and the weekly chart hasn't yet made that leg C. So let's just, it doesn't mean to sell or do anything. It just means that's the labeling right now. The MACD hasn't yet crossed positive, and stochastics had a very sharp move. So we'll see how that can be contained, or if there's going to be a breakout. Yep, I hear the music, and the music says we've got a break coming up. First break, 95.78.04 in the dollar, holding steady, not breaking down yet, even with gold's big move. This is so fascinating. I still think money is flowing into the dollar, even though a lot of people don't believe it. Apple tonight. Yeah, that's what's said in the jam. And we'll talk about Apple in a minute. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. So I had a question about the XLV just as I'm going through the charts in the den. There's a question. So the daily chart has made a peak C1, C2, is the same type of double top as the S&P. Not quite as, this is a perfect one because the high was, so it comes from the 81-ish area and it goes to 90.13, pulls back. The next day it goes to 90.05. I like it when it's just a fractionally off. That's really a good peak C1, C2. But as long as the technicals hold quite well, stochastic's not so good at 68%. MACD is still holding very well, making the dolphin phase. As it turns around, there's the little nose there. I think there's enough energy here to try to go a little higher, selectively higher, maybe not much above 90.25, but I think there's enough room. Yep, the weekly chart is not that great. Now, I was trying to type in IYH. I think I got that one. All should be all notated. Yeah, this one. That monthly chart, that December chart, really is very ugly, but it's a nice candle for January. Not great, but nice. The rebound in the weekly chart says, hey, if this doesn't make a single leg A up and holds the 180, it mustn't break under 182. It's at 185.75 right now. There's the IYH, the iShares US Healthcare, rather than the XLV. This is because I knew that I had notated this one quite carefully. So you made a high of 184.70 and then 184.85. This is the one that I like. You see, I like it when I get a pattern that confirms to the Chapman wave methodology. And there you've got your peak D. I can only put a plus sign right now because it hasn't got all the criteria that I need. The stochastic did go down below 80%, it's at 70%, but the MACD is still holding very well. And yeah, the price did go below the 9 and the 14 period, but so far, this is pretty good. So let me make it real clear. If you're in the position and you're really worried about it, I probably would say to you, if you want to take a little bit off right now, I see no harm in taking something off. It's completed the buy mode, hasn't got to a sell signal yet, but it's close. And that MACD is still a very positive influence, and the 200 period moving average had a gap down from, and then it went up above at 185.57. Is that a 6? 186.57. says that that's a magnet for now, and that there should be more price action above and below. So I don't think I'll do anything other than maybe if you're a little nervous, take something off. I like it. Yeah, I understand that weekly chart, but this daily is going to tell you, because if the daily of the IYH, think the same parallel as the XLV. If it closes under 183.50 in the next week, that is a problem. Then I would take a little more off. But so far, there's been a really nice effort to turn upside, and I'd rather deal with it that way. Next question I had was the TLT. Let me just it was SSYS. I think it was S&P and the Den who spoke about this the other day. We were at the peak D, and it was hanging around. I said, I like it. I wanted to see how DDD is doing. They go together, both. Well, one is an Israeli company, and the other is, hey, wait a minute. SSYS got taken over, and by an American company. Yeah, and that was up 9%. DDD is up 8%, having spiraled from yesterday's close in the 1146 area to today. It hits 13.45 and it's pulling back. It's 12.45 right now, 12.49 that is. Of course, the real time is 12.22. No, 12.48 is the price, and it's giving back some. So DDD is also acting, but maybe it's acting in sympathy, or maybe there was a recommendation. I don't know. Let me just go back here, see what SSY. That's, there we go. SSYS is Stratus Limited. It spirals to a leg F. I'm calling it F for now. I don't have to make any changes. This spiral is holding very nicely, much better than DDD, which is 3D systems. These are the 3D technology. I like it. I actually now like the monthly better in the SSYS chart than I had the DDD. And yeah, it's very good. If you're in it, congratulations. But I think this is it an earnings report? Both of them together on the same day? I didn't think they did that, if I remember correctly. Okay, now the next thing I want to look at was crude oil has a nice rally. It's trading at 134. I had a question from yesterday from someone saying, what about the USO? And I said, no. Take crude oil. That's the route. It's gone to the continuous contract went to D. The USO's only gone to a C. Today it makes a peak C1 and a leg C2, maybe, but it's holding really well. The 9-period moving average, it's above that in the weekly chart. That's the pink line. And the black line is a 14-period exponential moving average in the weekly chart, and that's at 1143. I think it's going to attempt to do that, and if it breaks above it, that MACD in the weekly chart is going to close positive, and you'll have the stochastic and MACD buy modes in the daily, and we'll see what happens in the weekly. But so far, this is good. Peak D said, Basil, as I said before, Piper, Jaffrey upgraded. Both of them. Okay, I wonder why they moved together. SSYS and DD. Wow, that's a spectacular move for an upgrade. Somebody must have been either short or waiting for the upgrade. Well, one has held its gain so far. The other one hasn't. It hasn't broken down, but it's almost below the opening gap. Okay, now what I need to do is, so USO, Jim, congratulations. That's a really good action that we're looking at right now. So then you had a question today: how do you predict oval start to finish parameters as it develops? So technically, I could go to the USO chart. Let me just see if I can do that on the crude oil. This is a continuous crude oil chart. Nah, not really. I was going to say I could possibly have made this into an oval pattern. It just doesn't quite fit the parameters. Well, I have to now go back and articulate. Okay, let me just show you here in the dollar. Here's one. And what happened is it broke out, and then it made this oval pattern. And I drew in the stork leg formation right there. This is the weekly chart, stork leg formation. My only qualms about the whole thing was I like the body to be quite oval. I don't like it to be more round than oval. And this kind of pushes the envelope for oval, but it did it. And then it got the neck, and then it got the beak. And remember, the rule of thumb in the Chapman methodology is that when the pattern is complete, when the beak completes, goes into the body or under the body, and completes by turning around sharply, there can be a very strong rally and that rally can take you quite a bit back up to where it was, and then you're on your own. That's the rule of thumb. Historical formation, very positive all the way until it makes the beak formation. Once the beak is complete, there's another rally, but then you're on your own. And you have to have, and that's why that on our own took us to a peak D in the dollar, and now it's just consolidating, just having a pretty good, when you think about what gold has done. Remember when gold was pulling back and the dollar was moving higher, gold was actually holding pretty damn well. And now what you're looking at is the exact inverse. Interesting, isn't it? So Apple, I said I'd look at Apple. We've got a break coming up. Apple right now is trading up 42 cents at 156.72. I'll discuss a little bit about, I'll discuss the pattern. I have no clue as to what will happen after the bell tonight. I'll just discuss parameters. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman wave methodology. Hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. We're looking at Apple, 156.54, up 24 cents. So here's the 120-minute chart, and it's saying it's kind of stuck in this arch, the lowercase h that goes to a consistent series of lowercase h's, and it's made one peak D in Chapman wave methodology. You're always looking for that fourth highest peak. When it went once, it went twice, it went 3 times, and it just made a peak C1, C2 at exactly 158.13, little double top. So all of this means absolutely nothing. Because what you really need to know is, what are they going to do? What are they going to say? What are they going to talk about in terms of the outlook What are they going to talk about in terms of their hardware products? What are they going to talk about in terms of their software? What are they going to be talking about in terms of their services? I think they're going to push their services a lot. And that's what I see when I go to the Chestnut Hill Mall here where the Apple store is. I see more and more people not coming out with bags, but doing repair work and getting lessons and all the peripheral stuff, which I think Microsoft has done it. Now they've turned into the service industry where you get this residual from payments every month for whatever services it is. And those programs seem to be working very well for some companies. My suspicion is that's what Apple's going to have to try for. So I'm just going to give you parameters. I'm going to say that the move from 233 back in October, and remember I said my thinking here is that Apple has made my Netflixes, the Googles, the Facebooks, Amazon. I say that I believe that they've made monthly hat-trick tops. They're going to take quite a few months in which to repair themselves. Some will come back strongly, and a couple of them are going to kind of struggle. And then I said Apple was a mature company. It had gone through its whole product line. I don't know what else is left. It has to come up with some really innovative, cutting-edge technology. Steve Jobs, unfortunately, is not there anymore. And I think that they don't have they certainly don't have the design capability that he had this eye for design. The package of the iPhone, when it first came out, was exactly like the Empire State Building in 1929. Empire State Building could not have gone that high, could not have had the wherewithal to be able to build that many floors, and it couldn't do the structure in the short amount of time unless it didn't use all the new steel products, unless it had, Otis hadn't that. In 29 they designed an elevator that could go faster, quicker, and higher than anything else. And all of these things came together. It was the materials of the windows. You remember there was a plane in the 50s, it was somewhere, that flew right into the Empire State Building. Nothing. A couple of floors had, one floor I think had an office or two that was messed up. And then the building just kept going as if nothing had happened. No, Apple is different. Apple, when Jobs put his iPhone together, that was just putting in the Gorilla Glass. You couldn't have made it unless you had the kind of glass that didn't break every week, because otherwise people wouldn't have bought it. You couldn't have done it if you couldn't get the microphones tiny and really good. You couldn't have done it if you didn't get earphones. In this case, they used different technology because you had to have an earphone, but for the speaker system, a tiny, and outstanding. You couldn't do it unless you had all these, unless the chips had come to the level where they could incorporate. You had to have a V8 engine. You had to have something really powerful to be able to incorporate all these new things. So that's what I'm saying. I think that Apple has seen a maturity of their product line, and now they have to go for something different. We'll see if they can do it. Let me give you parameters on my, will I be buying Apple now? I think you're going to have, I don't care whether it pops up 6 or 7 points. I think you'll have another chance to buy Apple later on. Maybe not at the low of 142 round number that was made on the 26th of December, but I think you'll have another chance to get it lower down. And I don't think you need to chase it. I think it needs more time to make another H pattern, a smaller H pattern, and then we'll see what happens. Maybe April, Apple really starts to build some momentum to the upside. Might have to wait, and that would coincide with what I'm looking at in the semiconductor index. I don't think they're close to finishing up their getting rid of all those chips and that they overmade. All right, well, that's that. So now I'm looking at Apple, and I'm saying in my automated Chapman wave methodology, this is the automated resistance 160.11. Okay, that's only 4 points away, but it's very strong, going all the way to 161 and 162.50. So if Apple is trading not overnight, not tomorrow at 11 o'clock, today is, what day is it? Tuesday. If on Thursday at this time when I do my show, Apple is trading at 164.50 or higher, I'll be very impressed, but I'll still say that I think it has to come down a little bit before you really want to buy it. Or maybe it even has to just go back to where it was today at 155, 156. But I think you'll have an opportunity to buy it, but it'll come back down. If it just immediately tanks And even with the report, the commentary that they make, even with going all the way through the night into tomorrow, if Apple is down more than 5 or 6 points and takes out, let's see, the 150, yeah, if it starts to trade under 150 in the next 2 days, that's really not good. Then you're going to be going down to the 138 weekly projection. 130 is next. But I think I got a feeling that it's going to be chop, chop, chop for a little while, and that you'll have a better entry point. So I think I covered that. I haven't really given you exactly what I think, because my thinking is that Apple is going to come into a lot of pressure for other reasons. And it wouldn't be Android, maybe it's Android, maybe, I don't know what it is. But slowly but surely, the infection, the intrusion into their sacred software, whereby you didn't have to worry as much as you were on Android, whether or not you'd be broken into, hacking, whatever it is. I think that's going to become a bit more of a concern. So I think there's time for Apple, and then I think it will become a great company again. So questions now I had. Yes, there was a question earlier on I wanted to take. Did that. Can we revisit Square? So Square is taking a bit of a hit today, down 10%, down 7.84 at 68.39. If you look at this, there's the 120-minute chart. Whoa, it doesn't have much support. Has a lot of resistance, 78.39, which is the area it got to. So 68 and 65s are the areas of support right now in the 10-minute chart. Let's go to the real thing here. SQ, one of my favorites. We've had nice gains in this. Haven't got into it lately. We missed a nice move. It went all the way from 49.82, over a 50% haircut, and screamed up to the 70. What was that high? 78.15 high on the 25th, 3 days ago, and now it's trading at 68. You got a downgrade. Gets an upgrade, gets a downgrade. You never know which way it's going to go. It depends on the tide, which way you wake up, on the left side, the right side. Meantime, back at the ranch, I had said to subscribers, we want to buy this, but we're going to wait for a pullback. Question in the den. S&P, did you ask? Let's see. Oops, I got a break coming up and I lost it. Can we revisit Square? I got a break coming up. I'd like to revisit Square. I'm hearing conflicting reports. My thinking was, from what I'd read and what I'd seen, is that it's squaring point of sale software managing receipts. I thought it was a real winner, but we'll come back and look at it technically.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're back and we're looking at Square Inc. SQ is the symbol, trading at 68.74, down 7.48. It's had a penchant for some pretty big hits to the downside, just as it had for the moving to the upside. So I'd like to do it on a technical basis. And technical basis, it did close to what we wanted, because this is something that we've owned periodically. We missed the entry, I think, quite a bit below, and I just didn't get back on the horse. Meantime, the left side, right side price time match, it did a couple of good matches below. I've taken them away. I don't like messy charts, but the Chapman wave inside wedge trend line, this little dashed green line, said that this should be the resistance, and it hit the resistance exactly at 78. In the 78.20s. Now what we're looking at is the peak E completed. The MACD is still good. It's turned down, but it's still really good. And stochastic strong at 89%. But and the on-balance volume is pulled back. Relative strength historically weakened some. So this is a downgrade, and there's an island reversal. I don't like these island reversals when it goes back into the body of the trading right there. This is a different oval pattern altogether. It just says this is an island reversal, gaps up for 2 days, and then gaps down, leaving the space, and that space is between 74.03 and 74.12. So that that point 08 or whatever it is going to be good to watch, because if it breaks above that again, it's going to be very positive. I'm just going to say, let's wait a day or two, because if it goes down another 3 or 4 points tomorrow below 68, that's going to be really tough. 65 is very strong support. I think all my comment in the den was, and I'll go to it in a moment, was that I think the general market is getting really toppy. I think that the MJ, the marijuana sector ETF, is getting a little toppy, and maybe one more peak, and then that's it. Takes a breather. So I don't want to grab SQ at this point. I need to wait. Maybe it's going to be that I have to wait a good few days, maybe even a week. But I don't want to buy it here. There's just too much upside that needs to be done at the same time as the market is beginning to weaken. I don't want to do that. So I've got Michael in Toronto. Michael, how are you?
Yeah, hi there, Basil. Thanks for taking my call.
My pleasure.
I'm just tuning in now. I don't know if you've covered the precious metals market since the show started, but I wanted to take a look at NGD, New Gold.
Okay, so New Gold in the metals area, obviously it's up. Oh, it's at $1.18. It's unchanged today. Do you have a position in this?
I'm watching it. I have no actual position. I'm just watching it. In your gut feeling, do you think it may have done a double top?
You know, this is because of trade. Let me just look at volume here for a moment. Oh yeah, it has a couple of million. Not that great. I mean, a couple of million shares on a $1.18 stock. I would have preferred to see 5, 6, 7, 8 million. You know what I'm looking at here? I'm looking at the bigger picture. Peak A, peak B, peak C fails, comes back down, but doesn't take out the low. So this I'm going to call a D for now with a potential double top. You know what I'm going to say to you? The risk is a little too much in percentage terms. If you bought it now at $1.18, let's just say intraday, it went to 122. Let's say it even took out yesterday's, not yesterday, the high of the 10th of January, 124. Intraday, let's just say it had this fabulous move. It moves up seven pennies, but by the end of the day, it closes at about $1.17 where it is now, or $1.10. Then that percentage move is really big intraday, and now you're stuck. You paid $1.17, $1.18. It's gone high. It's come back. It's kind of used up its energy. If this thing drops to key support, which is at 109 to 106 to 102, that's a big percentage. So I'm going to say to you, Michael, you've obviously, I don't know how you came across this, but you've been following it for a little while.
I have. Yes, I have. I just been watching it.
So here's my question to you.
I'm just
what? I just want to ask you the question before we run out of time. I want to say, what was it? The speed that stopped you from buying it as it broke on the 7th? It went to $1, and then the next day it went to $1.11. You didn't go in there, and you didn't buy it on the pullback. Now that it's back to almost the double top level,
yeah,
I'm saying to you, you missed the best opportunity, risk reward, once. You missed it again twice when it held the 14 period and the 9 period moving average about 5 days ago. Now it's becoming a little bit extended. I know it can go higher, but I'm just saying risk reward. If you want my true opinion, I'm going to say to you, hold off. Give me a call if this thing starts to trade at 106, between 109 and 102. Let's look at it again, because that U-shaped formation that becomes a W formation would be very powerful if it was to break out, because if it broke out the second time, I mean, if it went above 124, that would be, I think then it's going all the way to 132, 136. But I would go step by, I wouldn't. So in other words, you could buy a little bit now saying, okay, if it goes down, I'm going to add to it. But that has to be your plan. But then what happens if it suddenly goes back to $1? I mean,
yeah, I know.
To,
so this is kind of like a bull trap, right? I mean, it's got a double top. Looks like it wants to take off. And
correct.
People buy,
and the technicals are not as good.
Back at the end of the day.
And Michael, the technicals are not as good now as they were on the 10th. The MACDs are way lower. Stochastic is very much lower. I would just have patience. And keep it on your list, because this shows a propensity to go back sharply and then spring to the upside. So this is, you've got your eye on the prize, but the risk reward says you have to have patience. Maybe you won't get it, but I would have patience to try to get a pullback and then get that leg D that you're missing in the weekly chart above 120, 124. That's just the way I would do it. I think you've kind of missed a big chunk of the move right now. It needs a little time. Could be wrong, but I would say just risk reward. Let it pull back 10 cents, something like that. Let's look at it again. Give me a call as soon as it gets there. We'll do it again.
Thank you very much.
Thank you very much for calling. So, folks, I had a couple of questions here, a lot of questions, actually. MJ is the alternate harvest ETF. It's trading at 33.15, down 65 cents. It's in leg C in the Chapman wave in the daily chart. We're along from the 29s. It's been very good. And now it's starting to get a little toppy. But the weekly chart is improved. It's not great, but it has improved a lot. Monthly chart needs a lot of work. It needs more time with higher lows and higher highs. Good. Now, with that said, I was asked about Cronus. Now, Cronus is one that I think we either had or I had it as a buy in the 7s or something. It hit 19.48 today. I got berated about it just yesterday. Yep, we've had some fantastic non-winners in our selection when we've got out by being stopped out just too quickly, too small. But you needed that after the big pullback we had in December. I just didn't want to take too much risk. So now the question is, what about it? I think I'm calling it a leg F, although in the ingredients of a Chapman wave instant restart, this could have been an instant restart. So what I'm going to say, we're about to go to a break. I'm going to have a quick review of some of them during the break so that I can give you a synopsis. I would say they're getting a little toppy. They should be pulling back. They've had a spectacular run. The pullback might need time, or it might be just a quick reversal in price. I still want the leg D in the MJ. I'll do a little more when we get back. Dow's up 95, S&P's down 2. Basil Chapman, Tiger Technicians Hour. Be right back.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, folks, Steve comes up. Steve, you've got Dave White. You've got Tom O'Brien. I'll be back with Tom a little later on. Peak D, the Chapman wave. What does that mean? It means be careful. Other things can happen. There's your peak D. And the 2-minute chart is the 2644 level. And comes all the way back down to 2638. So we keep watching those. So GWPH, GW Pharmaceuticals is a medical marijuana trading at 135, made a peak B about 5 days ago. It's a high-level consolidation, little wedge type or triangle formation. MACD is good. Stochastic still good at 84%. Weekly chart has improved some. This should break to a leg C in the next couple of days. Above 142.99 is trading 135.09. Ooh, that's a big move. But anyway, that's what the pattern says. At some point in the next week, it should try for leg C. What was the other one? We got we did that. So I'm forgetting one. Yeah. So in the meantime, back to the rants, what I am saying is that there's a really good chance, based on the methodology we use, that this leg C will have maybe a lower high tomorrow, and then maybe Thursday or Friday, it makes that leg D. Then I think we are ready for some kind of a consolidation. That puts me into the category here of saying that the SPY has held extremely well. This isn't quite the oval pattern. I can't draw it in because it's really not an oval pattern. It's more rectangle. So I'm looking at this and I'm saying, if there is any chance, I don't know what's going to do it. Maybe Apple comes out with good earnings. That'll help the Dow because it's part of the Dow. Probably help the S&P. And it'll certainly help the Qs and the NDX. So if Apple can move even 4 points or 5 points higher tomorrow, that should help the SPY with everything else going on. And that would say that if the SPY is able to even get into its 263.76, it needs to fill the gap. It needs to get into, it really has to go to 265. It has to touch the 265s. It has to do that by Wednesday or Thursday. If it's able to do that, then we're looking at the market sort of being dragged up by this 200-period exponential moving average that says, try to get there. And then I think we're ready for a bit of a pullback. And that kind of would coincide with maybe bad news in the market. I don't know. But that's what I'm looking at. So thanks for being here, folks. I'll be back with Tom a little later on. Check out my opening call. We've had some really nice positions, good percentage gains, and check it out. I'm sure you'll find it interesting and hopefully valuable. Have a great day, and I'll see you later.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.